Good morning, trading world. It is December 12th, 2022, 7:47 a.m. on the East Coast, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook is On the Fringe. Heads up, dangerous trading coming now. We are reminded of how dangerous trade is by a couple of things today. The most prevalent factor is the market maker's expected move. If I go to think back, let me bring up one of the useful tools of TOS. All right, here in think back, going back to last week, or actually we got to go back to the second to see what last week's expected move was. That move was plus or minus 6.742. Compared to this week's move of plus or minus 13.026, excuse me. That's over double in the span of a week. And considering how inefficient it has been, this is a big deal to me. Now, I talked about the buildup of a possible gamma squeeze last week, and it continues. These are definite clues of the wild and dangerous trade window we are in. What really makes this window dangerous is how myopic most traders are, paying attention to only intraday time frames. And what is so dangerous on the technical side is the brewing fight between the higher time frames, the monthly, daily, weekly, and the 4-hour. Now, coming from last week, I held on to some bearish positions and will look to add to those possibly today. And I also held on to some bullish spread positions, and I look to break the legs of the remainder of those today. Timing is key right now, and best to be on the buy side of premium, because if you are mildly wrong, there's a good chance that level comes back around. Last week, if you remember, I did say we would revisit the lower part of the recent range again soon. Also, remember we have a number of tape bombs this week, starting with CPI tomorrow at 8:30 a.m., then GDP and the FOMC later this week. With that, let's bring up the key levels of the day. And here we are back with the key levels of the day, starting on the resistance side. We have our jack resistance at the 394 to the 395 area. Our queen resistance is 396 to the 397 area, which may prove very important today. And then we have our king resistance level, which is 398 to the 404 area. Something that I want to say before I kind of move on to the support side is because of the shuffling of the time frames, or the importance of the different time frames that I watch, tells me that on a day like today, we're probably headed higher, but it's not without struggle, I should say. Even though we're headed higher, we could grind higher, and then all of a sudden you get a bar that wipes out either all or half of whatever that grind took place, and then we start over trying to grind back up, and we get another one of those bars that may wipe out half or all of that grind up. So you have to be very careful about that over these next couple of days. Now, on the support side, we have our Jack support at 393 to the 392 area, Queen support 391 to the 390 area, and then King support 389 to the 387 area. The weekly outlook is bearish, closing below the 393.28 with a possible retracement around the 398 area. The main thesis intraday is bullish, closing above the 393.28 with a projected target high of between 394 and 404. The alternate thesis is bearish, closing below the 393.28 with a projected target low of between 393 and 387. The current major channel we are in is 397 and goes all the way down to 379. The major channel above is 397 up to 416. Today we do have harmony between the technical side, which is bullish, and the quant side, which is also bullish. We closed at the lower end of market strength and breadth on Friday. So looking for a possible pickup in those two indicators could take us toward the retracement level of 397 today. And definitely around that 397, maybe 398, somewhere in there, I'll definitely be looking to possibly set some more bearish positions, or at least break the legs on some of my bullish spreads and take advantage or take profit on at least the short side of those bullish put spreads. I guess that's it for this part. So let me bring up the scenarios of the day. All right, here we are with our first scenario and most probable, which is and that's just barely because it's pretty evened out today. But our first scenario is going to be our trend day up day structure. We could open with a gap up, start with a big fade back toward the previous close represented by the blue line. We find support on or before that previous close, then begin the uptrend for the day. We usually find our midday chop around either the possible queen or king resistance area. I'm going to be aiming more toward the queen resistance area. And we could start, or normally we start the second half of the day with a head fake that looks to continue the primary trend up. And once we get into that head fake, it usually leads at some point in time to a fade going back into the close. So that is our trend day up day type scenario. Again, be aware, because of the type of fight brewing between the time frames, we could see a lot of those, or I'm not going to say a lot, but they're going to be timely candles that can come out of nowhere and basically spoil what may looks like a rally. if we're headed up and we have a certain number of bars, let's say 10 bars that grind it up to a certain level, and then it could be just 1 or 2 bars that'll come and knock out all the progress that those 10 bars made. So be very careful and aware of that today. All right. Now we have our second scenario, which is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen support area and find midday chop around either the possible Queen or King. Sorry about that. I just realized I was reading what's actually the vice versa alert for today. I had to go back and correct that. But our scenario number 2 is our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area, find midday chop around either the Queen or King resistance before going back down with the same energy or force we went up with the first part of the day. That's the rounded reversal day type structure. Now let me present the vice versa alert, which would be as such. We would get a continued push lower off the cash open, find our midday chop around either the Jack or Queen support area, and then go up with the same amount of energy or force that we came down with the first part of the day. That's our vice versa alert. All right, the last scenario is our expanded range day structure. We could have an initial fade and chop sideways to up, find resistance once or twice before consolidating, then reversing. And the confusing part of this, which makes trading a reactionary business, is that this first time could happen pre-market, and this could be the second time here and we fall, or we could get a first and second time where we try to breach a certain level 3 times, which could be this excuse me, 395 or 397 level, and we could try for that maybe 3 times during the day and fail. So that's our expanded range day structure. Today is one of those days that you need to be very, very cautious as for how the setup may continue in the week. Whatever position that you're putting on today, you definitely need to be okay with whatever the max loss is for that position, because we are due some very explosive moves later on in the week, pretty much starting what I would say overnight into tomorrow. So you have to be very, very, very careful. And like I always say, your most important job as a trader is to protect the capital that you already have. And we do that, again, by knowing and understanding the risk that we have on in each position and managing those risks in accordance to our account size. I hope that this helps. Wishing you a positive trading day. Let's go out and make it a great one.